Hey guys, what's up? Alec back with the daily stock market. And we had a big old green day today. There you can see we're up 6.4%, $2,800 on the day. A lot of stocks were green today. A lot of stocks up 10% or more. We even had Upstart up 31%. And a lot of other stocks like NEO up 8%, Coinbase up 7%, Fubo up 8%. We saw Roblox down around 13% after hours to $63 per share after it was up around 7% on the day, and everyone was expecting Roblox to beat earnings. So what happened with Roblox? Let's dive in. Here you can see Roblox Q4 earnings highlight, record full year revenue, daily active users, and more. But the stock price is still down. Roblox Q4 was up 83% year over year. The stock was still down. With nearly 55 million daily active users, Roblox is increasing an integral part of people's lives, said Roblox CEO David. So I think this is going to be a huge growth company over the next few years. You can see year over year was already up 83%. So if they keep that growth up, Roblox could be a great one to be invested in for long term. So what happened? Roblox Q4 revenue of $500 million, up 83% year over year. Bookings came in at $770 million, up 20% year over year. Bookings came in ahead of 76 million consensus according. So they beat on bookings. All right. So everything's looking unbelievable so far and very good. Roblox reported 10 billion hours engaged in the Q4, up 28% year over year. Daily active users were 50 million in the Q4, up 33% year over year. So everything is up year over year, and I think that will continue to grow as their story unfolds and they expand to the international market. So here you can see for the full fiscal year of 21, Roblox revenue was up 1.9 billion, 108% year over year, setting a company record. Bookings were up, and daily active users were up 40% year over year. So everything was looking very good. For the month of January, Roblox sees revenue coming in at a range of 203 million and 206 million. And as far as the guidance for the month of January, it's looking good as well. Roblox sees revenue coming in at 203 million to 206 million, representing year over year growth of 66%. The company sees bookings coming in at a range of 220 million, which is about a 2% year over year. Daily active users were up in January as well, up 32% year over year. Hours engaged for January was up 26%. With nearly 55 million active daily users. The only real negative news I can find is that they were below on their net income. They were supposed to come in at negative 14 cents, and they came in at negative 25 cents, which was kind of expected because they're a newer company. As you can see, they've only had 4 earning reports total in the company's history, and they pretty much were below EPS every single time. So I think this drop does present a buying opportunity for specifically long-term investors, 12 to 24 months. I think Roblox can continue to grow 60% per year on revenue, and I think they can grow 60% per year on daily active users, which would be huge because right now they have 50 million active users, and I think they can grow that to 100 million active users, 200 million active users, so on and so forth for at least the next 1 to 2 years. They can continue to have some exponential growth. Also, company is going to some new lows. So if it does go below $60 per share, that's definitely when I want to buy them the heaviest, right around $60 to $55 per share. I think it's a great place for me personally to be picking up shares of Roblox for 12 to 24 months of holding. I just did a full deep dive in the last video, so make sure you check that video out if you want to hear a little bit more about Roblox. And the next one that we're talking about is Upstart, and this one moved big, just like Roblox, but it moved the opposite direction, so it moved up after hours, around 30% gains on Upstart. This was around $100 at the beginning of the day, and now it's up to $142. We've seen Upstart take a massive dip as well from highs of around $400 they had the highs at. All right, and they fell around 75%. and they still haven't recovered. As we've seen them put some resistances right around 160 to 140 in the past, so it's right in that range. So if we draw the line right there, you can kind of see that as soon as it broke past that, it set some new support and resistances. So you can kind of see that it's working on a new one right there. Okay, but if we go back to the macro support and resistance, what you can kind of see is that this is the pattern that it was supposed to be following, but obviously it didn't follow that. So we're going to have to readjust a little bit here for our pattern, and we can kind of see that this is the new support and resistance right here. If you guys want to learn a little bit more about support and resistances and some technical stuff and fundamental analysis that I do to become a better investor, make sure you message me. Get on my close friends list, because I also do all the technical stuff for you, and I just post about it, when I'm buying, how much I'm buying, what stocks I'm buying, when I'm looking to sell, when I'm selling, and how much also. So if you want alerts like that daily, go ahead and DM me, because I'm taking a few more people for my close friends list on Instagram specifically. So right here, we'll see it looks like that Upstart is going to pop back up, and we know that it's already popped back up too. So right now it just hit that resistance that it's following. There's a good chance, in my opinion, that it could bounce back down to $100 per share. The $140 to $160 resistance is very strong. So if it does end up going above 160, there's a good chance that it will have some steam to carry up a little bit higher in an upward trajectory. So here we'll see Upstart stock surges as company crushes earnings expectations, announces buyback program, which is always good when a company is announcing that they're going to be buying back their own shares. All right, fintech company plans 400 million share repurchase program, saying that volatility has led to attractive buying conditions. So when a company's buying their own stock, you know that they obviously think it's a great deal at that price point. Upstart anticipates roughly 1.5 billion in auto transactions volume during the full year ahead. So they not only crushed their earnings, but they gave fantastic guidance as well. Shares of Upstart Inc. surged in after-hour trading Tuesday after financial technology company easily topped expectations with its latest earnings and outlook, while announcing a new share repurchasing program. So Upstart, which uses artificial intelligence to inform lending decisions, generated fourth quarter revenues of 300 million, up from 86 million a year earlier, and ahead of the FactSet consensus, which called for 262 million. The total included 280 million. Roblox is actually growing their revenues more rapidly than Upstart is, keep in mind. So the company saw a net income of 58 million or 61 cents a share, and Upstart registered 1 million in net income the year before. So that's why they're being so attractive right now, is because their net income, the bottom line, they're really crushing it right now, up to 58 million, where Roblox, for example, is a negative earning company. We have Upstart as a positive earning company, and it's earning more money, making more money than expected. That's basically all the information that we need to go over for Upstart. If you want to pause it and read these last few paragraphs, there's a little bit more information there. But overall, I'm really looking for Upstart between 90 and $105. I think is a lot more of an attractive place to get into Upstart, and I think they'll definitely come across that price point once again. All right, so we already talked about two stocks that reported earnings today. Shopify is going to be reporting earnings tomorrow before the market opens, so watch out for them. Right now, we have all the markets green, and what we've been seeing is a couple days of green followed by a couple days of red in the market. With that being said, we can either see tomorrow or Thursday as a full red day on the market across the board, so just be careful if you're a short-term trader. But we see a new pattern being established with Shopify. We've seen the support as low as $815 to $810 per share, which is the best place that I'm looking to buy them, under $850 per share and as close to $805 per share as possible. However, with the earnings report tomorrow, they could either fall big or they can go up big. So I think we'll see a big movement on this e-commerce giant. And here you'll see company Shopify fourth quarter profit seen lower despite higher expectations, which is always bad. Earning preview. Canadian e-commerce giant Shopify is expected to report higher revenue but lower profit in fourth quarter. The Toronto and New York listed company is expected to report its quarterly earnings before the market opens on February 16th. Here's what you need to know. Revenue, according to consensus expectations of 30 analysts pulled on FactSet, revenue is forecasted to be 1.34 billion, up from 977 million just a year ago. The estimates among polled analysts range from as low as 1.2 to 1.4 billion. So there's a good chance on average that the analysts have that missing on their revenue. Earnings per share are expected to fall 30 cents from 99 cents, according to the consensus of 17 analysts. Adjusted EPS on an adjusted basis, consensus expectations of 31 analysts set a forecast of earnings per share to fall to 1.3 from 1.58. So what are we looking out for? The earnings beat. That's what we're looking out for. Canadian Investment Bank CIBC noted that Shopify has often beat revenues and EPS expectations since its IPO in 2015. So 5 years straight or more, almost 7 years at this point. However, the margin has been shrinking. Since 2015, the average beat is 7% on Shopify. Shopify's price increased 7% last quarter on the first trading day following its report, compared to an average price increase of 3.2%. Gross merchandise volume is the second thing we're looking out for. Investors will be keen to know Shopify's gross merchandise volume, a key metric used in online retail regarding the total amount of sales a company makes. CIBC expects gross merchandise volume to grow 28% year over year. So if they beat that 28%, then we can expect a positive reaction from the stock price. Also, we're looking for the earnings beat on the EPS. So I hope you guys enjoyed that quick video and went over some earnings. We're going to be going over earnings all week, so make sure you hit subscribe if you want to see more earning videos just like this. Comment below what stock you want me to talk about in the next video. We also see our account rallying up $3,000 today, and we're knocking on 50K door, then 60K, and I think we can get to 75K in this account in the next 1 to 3 months. So I think we'll start to see our account expedite and take off in the next few weeks or few months. Make sure you also message me on Instagram here if you guys want to join my close friends list. If you want to see some success stories, positive testimonials that are left by students, go ahead and click on success number 4. You can read through a bunch of different student success. Success number 3, success number 2. We have over 400 positive testimonials now and over 1,500 total students in the close friends course. So thank you guys for all the love and support. Share this video with a friend because you know they'll find it helpful. Don't forget to drop a like because it really helps the channel out, especially if you got this far in the video. Just drop a like. It's greatly appreciated, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.